Welcome. I'd like to welcome you to the launch of this report today, Central Banking and Supervision in the Biosphere, an agenda for action on biodiversity, financial risk and system stability. This event is being hosted by the London School of Economics on behalf of the NGFS, the Network for Greening the Financial System, and also the INSPIRE Research Consortium. My name is Nick Robbins. I'm a professor in practice for sustainable finance at the LSE, and I've also had the pleasure of being one of the two co-chairs, along with Dr. Ma Jun, of a year-long study group on biodiversity and financial stability. And this is the group that produced the report. So the study group brought together two initiatives: the Network for Greening the Financial System, a coalition of 108 central banks and financial supervisors with 17 observers, and the other partner was the International Network for Sustainable Finance Policy Insights, Research and Exchange, which is a research stakeholder of the NGFS and with research projects around the world, and which I co-chair. Before we go through the format for today, I'd like to say a word of thanks. First, thanks to the over 100 experts that contributed to the final report that you have before you today, which has just been launched. Experts from central banks and supervisors, from research institutions and other financial institutions, really for your contributions, your input papers, and your enthusiasm. The results we see today would not have been possible without you. So thanks to the study group. And then thanks also to the NGFS for its partnership with INSPIRE on this collaborative exercise. I'd particularly like to acknowledge the ECB's Frank Elderson, the previous chair of the NGFS, who helped get the study group underway and who we have with us today, as well as Ravi Menon, who is the managing director of the Monetary Authority of Singapore, who is the current chair of the NGFS, and I'd like to acknowledge his continuing leadership on this agenda. So to our proceedings for today. We all know that biodiversity loss is severe. From the scientific analysis, we know that this is threatening the habitability of the planet, is threatening future economic prospects. What we're looking at today is why and how central banks and supervisors can respond to the risks this loss of biodiversity, this degradation of nature, how they can respond within the financial system. First, we'll have Dr. Ma Jun, my co-chair for the study group, who will present the findings and recommendations of the report. Dr. Ma is advisor to the governor of the People's Bank of China and is also chair of the NGFS workstream on research. He will also be outlining how the NGFS will be taking forward this agenda based on the report. Then I'm delighted to have with me today a panel of real leaders from the world of central banking. We have Frank Elderson, who I mentioned before, who's member of the European Central Bank's Executive Board. Welcome, Frank. We have Sylvie Goulard, Second Deputy Governor of the Banque de France. Again, welcome, Sylvie, great to have you. And then also we have Otávio Damaso, who is Deputy Governor for Regulation at the Banco Central do Brasil. And all three organizations were very active members of the study group. There'll be a chance for you on the call to ask your questions. So as you listen to the discussion, please do submit your questions through the Q&A function. We'll try and take as many of these as possible. So without further ado, I'd like to hand over to you, Dr. Ma. It's been a great pleasure to co-chair this study group with you. And I'd like to hand over to you to make your presentation of the results, the recommendations, and the next steps that will be taken as a result of this study group report. So Dr. Ma, over to you, please.
Thank you very much, Nick. Can you hear me okay?
Perfect.
Great. Let me try to share my screen. Can you see this, Nick?
We can see it. Great. You just need to go back to the front. That's right. Exactly. Perfect.
That's the front, right? Yeah. Well, first of all, now let me thank Nick, my co-chair of the study group, for actually doing most of the work, especially all the organizing work for the research activities and the discussion. And my special thanks goes to Frank Elderson, who is the former chair of the NGFS, for his strong support for this joint study group by NGFS and INSPIRE. in the early days of the NGFS, Frank has already been very supportive of the view that NGFS should start with climate, but should not be limited to climate. And we should be looking at the broader range of sustainability issues, including environment, biodiversity, and so on. And his support enabled the creation of the study group, which is now presenting. So it's really my honor and pleasure to have the opportunity to present on behalf of this joint study group the key findings of the report, which is produced by more than 100 members of the study group. I hear some background noise. Is anything we can do? If any of you is still not unmuting, yeah, please do so. Thank you. The key messages, 3 things. Number 1, addressing biodiversity related to financial risks falls within the mandates of central banks and financial supervisors. I think this is by far the most important message you were trying to deliver today. Back a few years ago, I was talking to some central bankers and supervisors on this question of what we can do on biodiversity. A typical reaction I get is, why should we care? We central banks and supervisors have our mandates, which are to keep inflation low and to maintain financial stability. So why biodiversity is relevant to these mandates? So what we're doing now, in fact, in this report is exactly to answer this question. And our answer is that biodiversity loss will create financial risks. And therefore, it's relevant to central banks and supervisors, which care about financial stability. And loss of biodiversity may also have inflationary implications, which can work through the supply chain and the economic activity channel. The second message is actions are already being taken by some central banks and supervisors, but further efforts are needed. And our study group report outlines 5 recommendations that central banks and supervisors can take as the next step. And the final message, which is already presented, I think, 1 hour ago by the NGFS press release, stating that the NGFS welcomes the recommendations made by this report and will establish a biodiversity task force to mainstream nature-related risk across its activities, especially across its work streams. Just a few points on the study group itself. That was established about 1 year ago, a joint effort of the NGFS and INSPIRE, and it involved initially 50 members, 50 people of about 50 organizations, half of them coming from NGFS members and the other half from research institutions. And now we have more than 100 participants coming from 25 NGFS members, namely central banks and supervisors, and also 28 research institutes. It's co-chaired, as Nick said, by myself, representing NGFS, and Nick representing INSPIRE. We so far actually, as of yesterday, published already 2 reports, 1 vision paper in June and 1 interim report in October. And now this is the final version of the report, which is 100-page long. And we take most of the contents from early reports and now looking at the options already taken by central banks and supervisors on biodiversity-related issues and making a set of recommendations for actions going forward. So starting with the question of why should central banks and financial supervisors care about biodiversity loss? Our points are, number 1, our economy and financial systems depend on nature because biodiversity enables nature to be productive, resilient, and adaptable. And in fact, according to some studies, half of GDP in major sectors such as agriculture, fishery, forestry, pharmaceutical, tourism, transportation, retail, and some manufacturing are heavily dependent on nature. And biodiversity is being depleted systematically, and this will bring significant impacts on the economy. Here are 2 charts we took from the Living Planet report, which is produced by WWF. The first one is an indicator called the Global Living Planet Index. It's one of the aggregate measures of the level of biodiversity. It measures the population of over 4,000 species monitored across the globe. And this chart essentially says over the past 50 years, the index has declined by 68%. The second chart shows the fresh water living planet index, which measures the abundance of population of over 900 species living in the water. And this index has come down by 84% in the past 50 years. So if we are doing extrapolation, let's see a linear extrapolation, I think these indices are going to zero in the coming few decades, which will have catastrophic consequences for economy and living environment. The impacts of biodiversity loss on different countries are different, and the World Bank study are saying that on aggregate, the collapse of 6 ecosystem services could cost global GDP of 2.3% on annual basis, and its impact on low-income countries are much bigger. For example, for sub-Saharan Africa, that impact could be as much as 10% of GDP, and also fairly significant for South Asia. What are the financial stability implications and policy implications? We understand that the primary responsibility for confronting the biodiversity crisis rests with the government. In many countries, I think these are the environmental ministries, and they need to work out the measures to overcome the market failure, institutional failure, and policy failure that are driving the ecosystem decline. But actions by central banks and supervisors can play a complementary role in protecting nature and biodiversity by reducing biodiversity-related financial risks and help guide financial resources to support nature-positive activities. And for us, namely the central bank and supervisors, the more important message is that addressing biodiversity-related financial risks falls within our mandate, as biodiversity loss can lead to financial risks, including physical and the transition risks. Now, let me get into these two concepts a little bit more. The physical risks arising from dependencies on ecosystem, and transition risks arise from the impact of economic activities on biodiversity. And here are more sort of precise description. Physical risks results from the degeneration of ecosystem services on which economic activities depend. It sounds abstract, but let me give you two examples. Globally, $235 to $577 billion of global crop production depend on animal pollination. Just imagine the disappearance of animal pollination is going to lead to a drastic reduction of crop production. And therefore, investments in such production process will suffer greater losses. And the second example is the $600 billion of consumer spending is on eco-tourism, which is reflecting the recreation value of the ecosystem. And if we don't have the recreation value because of loss of nature and biodiversity, then a large part of 600 billion will be lost, and therefore resulting financial risks for those who are investing in the eco-tourism industry. The other concept is called transition risks. It's resulting from the misalignment between the firm's impacts on biodiversity and developments aimed towards achieving a nature-positive economy. Sounds an awkward long sentence, but again, let me give you two examples to illustrate this concept. DNB estimated that a 30% decline in protected land and sea areas, which is a government action to protect nature, would almost double the risk exposure of Dutch financial institutions to 28 billion euro. A similar story is actually happening in China. In China, the government is expanding the area of protected zones, and those activities already happening in the zone, including real estate, mining, and the manufacturing companies, they are being shut down because of the extension or expansion of protected areas. And these government actions certainly would lead to financial losses for those who are investing into these activities. The second example is consumer preference. In the US, consumer preference for a plant-based diet resulted in a 36% increase in sales of plant-based milk and a 12% decline in sales of dairy milk. So it's a consumer preference change, but also reflecting technology change could lead to decline in economic activities in the dairy milk industry, and therefore financial loss for the investors. Again, transition risks is reflecting a combination of two things. One is negative impact of companies' activity on biodiversity, and the second one is developments. It could be government policy, it could be consumer preference change, it could be technology aimed towards protecting the nature. And these risks, as we described, are micro to start with, but they could have a macroeconomic implication. So once they're aggregated, it could lead to a macroeconomic deterioration in some extreme cases, and it could present a threat to financial stability. We also looked at the need for integrated approach towards analyzing climate risk and biodiversity risks. Just look at this chart. There's overlapping portion of the two circles, which are the overlapping portion of the climate-related risks and the biodiversity-related risks. And that part reflects the common drivers for these two change, biodiversity loss and climate change. For example, land use change and deforestation could do both. Just take deforestation as an example. Deforestation will reduce the forestry's ability to absorb carbon and therefore contributing to climate change. At the same time, is an act for biodiversity loss. Moving on to options for addressing these risks. And we have seen some emerging options already from a number of central banks and supervisors. Just give you a few examples of our survey. We identified 7 emerging options in different, using different instruments. And here's one of them, which shows that 7 central banks around the world have already done some assessment on the exposure of their financial system to biodiversity loss. And the chart on the right-hand side is showing the physical risks. And it's measured largely based on the dependency of economic activities of those activities financed by the banking system on biodiversity. And Malaysia is probably standing out. It's at 54%, namely 54% of banking system portfolio are heavily dependent on biodiversity. And there are other examples of central bank supervisors taking action in the area of prudential consideration, taxonomy, disclosure, and portfolio. For example, the Central Bank of Brazil, ECB, Monetary Authority of Singapore are already working on including biodiversity in climate and environmental risk analysis. In China and Malaysia, the central banks are including biodiversity consideration into their green taxonomies. And the Bank of England, the Central Bank of France, ECB, and the Financial Service Agency of Japan and Bank of Mexico are part of the TNFD already, looking into how to improve disclosure of nature-related information. And a couple of central banks, including from France, Italy, and Switzerland, are working on integrating biodiversity into their investment portfolio, namely central banks' ESG investing. Still, these are very early stage efforts, and we need to look beyond and identify specific options for central banks and supervisors to address biodiversity-related risks going forward. And here are the 5 recommendations coming out of this NGFS-INSPIRE final report. Number 1, recognizing biodiversity loss as a potential risk, which is essentially saying that the recognizing is a part of your mandate for central bank and supervisors. Second one is on building capacity for analyzing these risks. Third one is on measuring exposure of financial system to such risks. And fourth one is about managing these risks. And finally, on creating the financial architecture for mobilizing financing for a positive, nature positive economy. Let me give you a little bit more details of these 5 recommendations. I'm sure our panelists will elaborate more with real examples. The first recommendation on recognizing biodiversity loss as a potential risk, which certainly entails the need for developing a response strategy. And we think financial authorities could include biodiversity loss within the green finance and environmental risk management frameworks, taking an integrated approach that highlights the linkage between biodiversity and climate change, and engaging dialogue with governments, especially environmental ministries, to talk about how to coordinate on biodiversity-related policies. Number two, on capacity building, we're talking about developing skills and capacity among central banks, supervisors, as well as market participants on analyzing biodiversity-related risks. This would include international efforts on training, capacity building, and also research. And we, the study group, actually developed a research agenda as part of this report on specific items to close the knowledge gap, including on modeling, on data, on metrics, and so on. Number three, assessing the degrees to which financial systems are exposed to biodiversity losses. And these refers to the physical risk and transition risks. And we should also look into the usage of scenario analysis and stress testing, which are mimicking the work done on climate-related risks. And we should also working on the creation of a dashboard of biodiversity-related metrics. Here is a framework for how scenario analysis could be done. This is looking very much like a climate risk scenario analysis. We're just replacing one box in orange with the biodiversity-related shocks. And you can see the shocks can be physical or transition in nature, and they will have macroeconomic consequences, they will have sectorial consequences, and they will then have impact on companies' financials. And these financials change will eventually result in change in financial risks, for example, in the form of increasing non-performing loans or in the form of decline in equity valuation of investments. The fourth recommendation is on exploring options for actions to manage biodiversity-related risks. This includes reviewing existing supervisory frameworks and developing supervisory expectations and assessment program that could address financial institutions' governance, risk management, strategy, disclosure, and financial conduct. And finally, building the necessary financial architecture for mobilizing investments for a biodiversity positive economy. The difference between 4 and 5 are essentially 4 is on risk management and 5 is on mobilization of new money for nature positive economy. And under 5, we're talking about contributing to or leading on the development of biodiversity related taxonomies, encouraging ESG rating to include biodiversity, exploring options for integrated approach to address biodiversity-related consideration in monetary policy operation, including potentially the usage of monetary policy instruments to guide resources into nature-positive economy, and incorporating biodiversity protection into central banks' investment portfolio. As I said earlier, this is a type of ESG investing of central banks. My final page is about the NGFS press release. I think it was out back 1 hour ago. It's talking about the next steps for the financial sector on biodiversity-related issues and about itself. In terms of next step for financial sector, the NGF press release is calling for the building of a scientifically grounded analytical framework to assess interaction between nature and economy, bridging the data gaps and using this new framework and data sets to align policies with the environmental sustainability and informed assessment of nature-related risks. For NGF itself, it says we're welcoming the recommendations of this report, and they will create a task force to mainstream the consideration of nature-related risks across its activities, especially across its work streams. So let me conclude by saying that this NGFS statement today represents an important milestone in NGFS history, indicating that it is beginning to move beyond the initial focus on climate risk and begin to extend its coverage to a wider range of sustainability issues, especially nature and biodiversity. And I strongly believe that this will happen to many central banks and supervisors in the coming few years. that's it of my prepared remarks, and back to you, Nick.
Well, wonderful. Thanks so much, Dr. Ma, for giving us that whistle-stop tour, I think I call it, of this 100-page report. And for those of you on the call, I'd really urge you to have a look at the statement that Dr. Ma was mentioning from the NGFS about how to address nature-related risks as part of the overall responsibilities of central banks and supervisors. I just now want to turn to the panelists who are lined up here to really get your reflections, your first reflections on the report, the statement, and this moment we're in, and how we take this agenda forward. So first reflections, I'd like to turn to you, Frank Elderson, if I may, and get your first round of thoughts. So please, Frank, over to you.
Well, thanks a lot, Nick, and wonderful to be here with you, Ma Jun, Sylvie, Otávio, really a pleasure. Now, let me go back a little bit in time. When the Central Banks and Supervision Network for Green the Financial System was founded in December 2017, the 8 founding members, we took a very conscious decision regarding the name of the soon-to-be-born network. We did not say it was going to be the network on climate risk management. We didn't say it's the network on making the financial system Paris compatible, but we mentioned we wanted it to be called the network for greening the financial system. And this broader scope is fundamental, and it is explicitly laid down in the NGFS charter that refers to climate and environmental risks. And, you know, I vividly remember the discussions that we had 4 years ago. I remember the room where we were in, I remember who was sitting where, and I remember who said what. And we very consciously decided to explicitly lay down in the charter of the NGFS that we would focus on climate and environmental risk. This was 4 years ago. And the same fundamentally broader beyond climate scope was also explicitly reflected in the first comprehensive call for action report that we published in 2019. That was 3 years ago. And that seminal, groundbreaking report that has been cited over and over again now, identified compelling reasons why the NGFS should also look at environmental risks relevant for the financial system, due to their idiosyncratic materiality for financial institutions and the financial system, but also due to, and Dr. Ma Jun has just recalled that, due to their interdependency with climate-related risks. So already in these early days, the NGFS expected that over time, more resources would indeed be dedicated to the analysis of environmental risks. Biodiversity-related, nature-related, and environmental-related risks are in the very DNA of the NGFS. And this was complemented by another landmark report, the NGFS occasional paper on environmental risk analysis, published under your leadership, Dr. Ma Jun. And it's very clear that you have been a very vocal proponent of this broader view from the very start. And that report was published in September 2020, 1.5 years ago. Now, in spite of all these achievements, I think that we have to admit that until now, progress of the work by central banks and supervisors and the international standard setting bodies, I should say, as well, on integrating environmental risk in their work with, let me say also that, some notable positive exceptions, but by and large has advanced less than the integration of climate-related risks until now. Because, and this is today, this new INSPIRE NGFS report confirms the conviction that we as founders of the NGFS had in late 2017. And that is reflected in the statement of the NGFS today. And I think it's very important that you, Nick, you, Ma Jun, you have referred to this already, because I think it's a hugely important statement. Nature-related risks, I'm just citing, nature-related risks, including those associated with biodiversity loss, could have significant macroeconomic implications, and that failure to account for, mitigate, and adapt to these implications is a source of risk for individual financial institutions as well as for financial stability. In a nutshell, nature-related risks, biodiversity loss-related risks are within the mandate of central banks and supervisors, squarely within our mandate. Thus, it is not a matter of principle that the work on environmental risks is less advanced than the work on climate. It is only a matter of putting it into practice. And with the matter of principle definitely out of the way with today's reports, it is clear that we can no longer drag our feet with the putting into practice part. It is simply vitally important that we do so with great urgency. Indeed, while the analytical frame of climate-related risks can be largely transposed to environmental risks, these latter risks come with their own unique features and challenges. For example, biodiversity does not have one single metric, such as CO2 equivalence, which figures prominently in climate discussions. So one needs to look at many more metrics, such as nitrogen, phosphorus, and others. So let me emphasize, look more, not look away. It is encouraging indeed to see that the report identified 45 specific actions by central bank and supervisors around the world in terms of research, policies, and engagements. 45 specific and concrete actions of looking and doing more. Now, I had the privilege of being involved in what today's report mentions as one of the first attempts of a central bank to quantify the extent to which supervised institutions are exposed to risk from the loss of biodiversity. And this was the exercise done by the Nederlandse Bank, by the Dutch Central Bank, when I was still board member there. And we learned a lot about the materiality of the risks of biodiversity loss and also about how to analyze them. And then Dr. Ma Jun referred to this. Yet, and this is why I mentioned this now, the most important learning to me coming from that exercise was something different. What I learned was that if we truly want to understand all material risks that supervised entities are exposed to, looking more also requires inviting more sets of eyes, more expertise. For the DNB analysis at the time, we cooperated with the Netherlands Environmental Assessment Agency because they are experts in the field of biodiversity. And this thinking is also signified by the involvement of so many in establishing the report that is launched today, with the critically important role of the INSPIRE network. Let me just say this very clearly, Nick, I think that you are doing wonderful work. The report's clear messages, building on the 45 experiences that are already out there, confirm that if one is ready to look more, one will also find more on how to incorporate environmental risk in the work of central banks and supervisors. We need to bring this work up to speed in line with our climate-related work, and we need to do so now. The materiality of environmental risks does not allow us to look at these risks in subsequent steps. First climate, and then in 20 years, we bother about biodiversity loss. You've just seen in the graphs shown by Dr. Ma Jun, if you extrapolate these diminishing lines, there will not be any biodiversity to be saved by that time. So we need to do this at the same time. We cannot ignore one set of material risks because we consider that we are presently already rather busy focusing on another set of material risks, especially if these two sets of material risks, climate and biodiversity, are interrelated to a very significant extent. Banks must manage all their material risks, and supervisors must supervise all material risks so that banks do so. Turning a blind eye to an important source of material risks is simply not an option. Our mandate does not allow for us to do so. So let me conclude, at least this part, Nick, because I know you're already looking at your watch, by paraphrasing Professor Dasgupta: humanity is embedded in nature. And I would like to expand that, therefore, by saying society and the economy must be embedded in nature. finance can only thrive if it is embedded in nature in a truly sustainable manner. Dr. Ma Jun, Professor Robbins, friends, what was embedded in the NGFS's DNA from its very conception has found a concrete expression in today's report and has thus been brought to life. And this work is of vital importance on the road to reconciling finance with nature, and thus sustainably embedding finance in nature. And this work is of vital importance, therefore, on the road to greening, to truly greening the financial system. Thank you.
Wonderful, Frank. Thanks for that perspective and actually showing how this really relates to that sort of founding mission, really, of the NGFS. And thanks for your remarks. I think particularly the clear sense that this is there's not an option to turn a blind eye either as banks and financial institutions to material biodiversity risk, or indeed for supervisors themselves. I'd like now to turn to yourself, Sylvie Goulard at the Banque de France. Really, your thoughts of where we've got to with this, a very complicated issue, but your sense of both the findings of the report and also sort of where institutions such as the Banque de France go forward. I'd really like to hear your thoughts, Sylvie.
Thank you very much, Nick. And let me first really express my gratitude, because we are here, we comment, but the work was done also by others. And as you know, the Banque de France is hosting the secretariat of the NGFS. There are many people working on this in my team, in your team, Nick. Of course, nothing would have been possible without the very strong leadership of Frank. And I can stress it, what he told us represents exactly the feeling we had, a passionate share of the NGFS. And I know, Dr. Ma Jun, the role you are playing, as it is a global issue, and the cooperation with you. So let me say my gratitude to Romain Schwarzman, to Simon Dikau, and all the ones I cannot mention. Why is it important? It's not just to begin with some thanks. It is because it is a global issue. It is a complex issue where, as Frank just stressed, we need to combine expertise. We need to have a large team of people working together. And this report is a teamwork. And I'm glad also that so many students and young people are listening to us. I will not be too long in order to get your question. So this report is very clear. I found it very easy to read. It is not only for specialists. Look at the boxes, for example, on many points, you have definitions. It's very pedagogical. Many things were said on the number of central banks doing things. But to put it I intended to say, as Frank said, that yes, we are embedded in nature. And if I can make a small joke, even central bankers are embedded in nature. This is a little bit the message of this report. Financial risk stemming from biodiversity loss can have implication for financial stability and the functioning of the economy at large. So it is our business. We should care, as Dr. Ma Jun said. And that is the reason why we have to take care of this. And we can, by taking care of this, have a signaling effect for the markets. We are actors, among others, and we respect very much what is done by some private actors. Maybe we will talk later on the TNFD, for example. But public authorities can also give a signal which is of a very specific nature. So this report is clear, it is easy to understand, and it is a wake-up call. We are less advanced than on climate. This is absolutely clear. The risks are growing. The report mentioned that biodiversity is declining at unprecedented rates in human history. And I don't know you, but I have a little bit of feeling reading these reports. 10 days ago, it was the report of the Malaysian Central Bank, that we know what is happening. Of course, as Das Gupta would say, it is silent, because nature is silent, but we cannot say that we are not aware of the dependencies. And I want to say how much I appreciate that not only Ma Jun is with us, but also Otávio Damaso from Brazil, because it is actually a global issue. I will not insist enough. The Malaysian paper was written also with the World Bank, and we could reach quite soon tipping points. And as we have this growing body of empirical evidence, it is a call to action. It should be a call to action. So which priorities? Very rapidly, it was said before, increase awareness first. It is not less important than climate. It is not less urgent, and it is connected with climate. The report mentions the risks of negative trade-offs if we deny this nexus, but there is also a positive side. When you fight against deforestation, as Dr. Ma Jun said, you can also help keeping means to capture CO2. So increase awareness. The danger in front of complexity is sometimes, and it's very human, say, oh, it's so complex, it is so huge. Should I really try to do something? Yes, we should, we must. Second point, we can use some of the tools already developed for climate. In the central banks, we have already looked at our own monetary portfolio. We know it is a matter for financial stability. And for example, the report proposes to better assess the exposure of the financial sector to biodiversity loss. That is the reason why the task force the NGFS is about to launch will be of the utmost importance. We have already developed skills and tools for supervisors in the banking sector above all. The TCFD framework was used by the TNFD to encourage disclosure, which would be easier to show, if I may say so. And we also have decided in the European Union, the Eurosystem, to go green on climate in terms of monetary policy. And in Marseille, at the last UICN Congress, Christine Lagarde mentioned one of the papers we did at the Banque de France, written by Romain Schwarzman and others. So the awareness is there. So let's try to use the experience of climate. And at the same time, and I could not agree more with Frank Elderson, we have to adapt them, because the two circles of Dr. Ma Jun showed there is an overlap, but it is not exactly the same thing. So we don't have one metric like the CO2 tone or temperatures. Nature-related issues are often sector-dependent, on Earth or at sea, between agriculture and other fields. The regional aspect is very strong. I'm sure that Otávio may tell us more on rainforest than I could. And many of the impacts are indirect and they require ad hoc framework models. This is clear. And that also this complexity, which requires more skills, it was said, it is one of the recommendations of the report. My very last point, let's be inclusive. As the report stresses rightly, central banks are not alone. Public authorities have a role to play in adapting and enforcing preservation rules, adopting taxes, incentives, taxonomy, disclosure. It is not our business. But if they do, we will act in a more efficient way. And the private sector, companies, but also consumers can be really helpful. Make your choice in a manner which is taking into account nature and biodiversity. NGOs are triggering us. And let's hope that ostriches, do you say this in English, will not be the only species to survive, because you know what I mean by that is that we cannot refuse to face reality, no matter how complex the issue is. We should not behave like ostriches. We should work together, but this is very encouraging. So thanks a lot, Nick, for the support you provided as well, and thank you for the discussion.
Fantastic, Sylvie, and I really liked your remark about the inclusive nature of the response to biodiversity loss and the decline of nature. I think hopefully what the study group has done with this report and then the response from the NGFS is show where central banks and financial supervisors fit in the solution set broadly, given their particular mandates. So we've had some participants from Europe. We've heard from Dr. Ma in Beijing, in China. We're going to go across the globe to Brasilia, to Banco Central de Brazil, to you, Otávio. Fantastic to have you. It'd be really good to get your thoughts again, strategically, the central bank, I think, has been one of the leaders in integrating ESG and other factors. Where do you see the report's findings and the next steps for you? So, Otávio, please, over to you.
Okay, good morning, good afternoon, and good evening, everyone. Nick, Sylvie, Frank, and Dr. May. It is an honor to be invited to speak in this memorable occasion, for which I thank the organizers. On behalf of the Central Bank of Brazil, I want to complete the NGFS and Joint NGFS-INSPIRE Study Group on Biodiversity and Financial Stability for the launch of this report, which I believe will be a landmark help to shape the actions of central banks and financial supervisors around the world for years to come. The final report contributes decisively to the discussion about biodiversity-related risk to financial systems. It assembles elements for understanding financial exposures to biodiversity-related risks, critical challenges to the financial system in responding to biodiversity loss, and options for central banks and financial supervisors to address biodiversity loss, along with practical recommendations for action and a prospective research agenda. I think the report also brings an important conclusion. Biodiversity loss could have significant macroeconomic implications. Failure to account for, mitigate, and adapt to these implications is a source of risk relevance for financial stability, a statement that I totally endorse. Climate change and biodiversity are intrinsically linked. This link brings the potential for risks to compound and create systemic dislocation. Central banks and financial regulators around the world are already aware of the risks posed by the climate change, and now an integrated approach to these twin threats is essential. Central banks and financial supervisors can benefit from the conclusions and insights from the report. It puts together emerging operational approach to identify and assessing biodiversity-related financial risks and suggests a useful research agenda. But most importantly, the report highlights that biodiversity loss is a source of financial risks and thus falls within the mandates of the central banks and financial supervisors. As stated in the report, inaction is a growing source of risks, and we should start acting immediately. The discussion about the biodiversity-related risk to financial systems is particularly important for Brazil. We are the most biologically diverse country in the world, account for 15–20% of the world's fauna and flora diversity, with more than 100,000 animal and 400,000 plant species, comprising 7% of the world's cataloged animal and plant species. Brazil is a country of continental dimensions with 6 very diverse biomes: Amazon, Cerrado, Atlantic Forest, Caatinga, Pampa, and Pantanal. Over the past 15 years, Brazil has established a robust set of environmental laws, regulations, policies, and instruments to combine economic production and ecosystem conservation. The most important is the National Forest Code. Such framework has helped to control the deforestation and to protect the new conservation areas and indigenous lands, while also curbing greenhouse gas. This framework, along with the deployment of public finance, helped the achievement of significant results, such as significant increase in agricultural productivity without the necessity of opening up new lands and developing of a market based on private green finance instruments. Central Bank of Brazil has a long tradition in regulating the financial sector aimed at more vulnerable biomes such as Amazon and Pantanal. Such biomes also receive special treatment in our forest code. Recently, the Central Bank of Brazil reinforced its deep engagement to this agenda. In September 2020, we launched a new sustainability pillar in our strategic agenda, which encompasses several different initiatives. Following this agenda, after a broad consultative process with the national financial system and Brazilian society in general, in September 2021, we published a set of regulations that improve the integrated risk management framework by financial institutions, by including the management of social, environment, it is important one, environment, and the climate risks. Within the prudential framework, biodiversity loss is treated as an event of environment risk. It is in our framework. Nevertheless, we are already considering revising this framework to improve its approach to the risk of biodiversity loss due to the potential relevance to this risk in our context. So this event is too much important, and I would like to congratulate all that participate in this final report. Thank you.
Otávio, brilliant. Thanks so much. And as you say, Brazil, the importance of biodiversity is so important, as you are the most biodiverse country in the world. And the steps you've already taken, I was interested to hear in your last comment how biodiversity is a reflection of the environmental risks you've acknowledged in your work, and you were thinking of revising that further. I think we've got a great set of questions coming in. Thanks so much. Keep them flowing. I think one of the themes in some of the questions, and we'll go to specifics maybe in a little while, is really how we translate this general recognition of the importance of biodiversity into specific actions. We have a question from Nathan Dariba Cellier saying, this report looks all very good, but actually, how does this translate into particular actions? So I'd like to maybe turn to the panelists, and maybe bring yourself in, Dr. Ma, as well. So back to yourself, Frank. We've heard a little bit from Otávio about how this recognition is starting to move into supervisory frameworks. That's something I think you've been looking at within the ECB. Can you give a sense of how this sort of broad recognition gets translated into the granularity of supervision? Thank you.
Very good. Thank you, Nick, and thank you also for the underlying question of, I think, Nathan, you mentioned, who asked that. And I think that is exactly what we expect from this audience, to be sharp and to say, okay, this is all very good and well, but what are you doing about this? So I think that is a very good start of the question. Now, so what is the ECB supervision doing? In late 2020, we published supervisory expectations. So documents saying what we expect banks to do in terms of climate related and very specifically environmental risks. So we knew that this work that is being presented today was already going on. So we included this in these supervisory expectations. So all banks know that we expect them to also look at this. And we made it concrete. So we talked about loss of ecosystem services, water stress, biodiversity loss, resource scarcity. So a number of elements that are sources of financial risk. And we expect banks to evaluate all environmental risk related information beyond climate risk in this broader sense. So that is, then last year, after the publication of these expectations, we asked the banks to conduct a self-assessment. So we said, okay, now you know what we expect. Look at yourself. Tell us how far are you in line with these expectations, and is there a gap? And if so, how big is that gap? Now, what we found is that some banks have already started to identify and manage environmental risks beyond climate. Such as diversity loss, but also, for example, pollution. For instance, there was one bank that has started to develop a methodology to measure the biodiversity footprint of its investment and lending portfolios. Others have developed a dedicated group policy, so the policy within the banking group, regarding the commitments and lending criteria related to biodiversity risks. So that is good news. So we found concrete examples. The bad news was that these practices, as we speak, apply actually to very few banks. So we have highlighted this gap with our supervisory expectations, and this is then where we start. Now, next, we will insist that banks start closing this gap between the supervisory expectations, where they stand today, and that they monitor their progress, and we will monitor then also that progress. And in doing so, we also point out something that goes to the more positive side of all this, saying that there's also benefits for banks to do this. Of course, in terms of the risk management, but there's also significant savings. That if you take advantage of the momentum that's already there now in terms of climate risk management, now extend your preparations, your the training of your staff, the capacity building to cover all these risks, climate and environmental risks, and therefore also then to make sure that you are ready as a bank for a new, more concrete supervisory and a regulatory. Because there will be more regulation. This is about the transition risk that Dr. Ma Jun was already referring to at the beginning, environment. So there's something to be gained, of course, by the world, but also by the specific banking institution, both in terms of its risk management, but also in terms of cost saving and in terms of taking the opportunities. So as concrete next steps, we will assess how banks are managing their exposures to environmental risks. Also this year in a thematic review, which is a term of art, but it means that it's a fully fledged supervisory review of all the about 120, 130 banks that are directly under the supervision of the ECB, checking how they do vis-a-vis these expectations. Thank you, Nick.
Thanks, Frank. Thanks for giving a bit of granularity. Good. So to you, Sylvie, you mentioned that, we saw that France has actually been, Banque de France has been one of the country's central banks which actually have been doing work on this. You mentioned the report that your colleague Romain Schwarzman did with the great title of A Silent Spring for the Financial System, ? So is there a bit of granularity about what you as an institution, the Banque de France, are doing on this and some of the insights you're seeing, just to get that sort of granularity? Thank you.
Well, Nick, as a researcher, you will appreciate my answer, because the paper you mentioned, The Silent Spring, which is excellent, is a working paper. So it is not a paper engaging the Banque de France. And I must confess that there is no official position yet of the bank. But first of all, our researchers are doing a great job, and it is necessary to know what we are talking about before taking a decision. And at the same time, I really believe that we are sometimes going beyond our own position. I was looking actually, it is the first joint report we wrote with the agency in charge of supervising the markets, the AMF. So the supervisory branch of the Banque de France ACPR and the AMF wrote a joint report in December 2020, where there was a focus on biodiversity and where we were looking at what banks are doing. And I don't want to repeat what Frank said. There are some efforts, but they are limited, and for this reason, insufficient. This is more or less the picture, but people are trying to begin. We have also a national law, inviting companies to disclose what they are doing about nature and the dependencies and the impact. We are in this very first phase, but we are determined to continue. If I just add one point, the reason why I'm confident, it is not only because we write good papers as the one of today. It is also because if you look at this from the private sector perspective, if you want in the future to have returns and keep clients and recruit good people, you cannot simply ignore the impact of your activity on nature. The young generation, and this is also a message to your students, will not accept to work in companies not caring about nature, climate, human rights, etc., and rightly so. So I really believe it is in everybody's interest to make this progress. We will look at all the aspects the day we will have taken the decision. What we are also already doing very concretely is to integrate biodiversity in our non-monetary portfolio, which is, I'm sharing the risk committee, something that it means a lot, because then you have to look at the returns, you have to look at the problems, you have to look at the quality of information, you have the skin in the game. So combining research, skin in the game operation, pressure from the civil society and the companies, I'm sure we will make progress.
Thank you, Sylvie. Back to you, Otávio. Would you like to give us a little bit more? You mentioned in your initial remarks about how the Banco Central do Brazil has been taking action, and you had some recent initiatives which have strengthened your management of social, environment, climate risk. Would you like to give us a little bit more detail on that before I turn back to Dr. Ma? Thank you. And we had a question, particularly responding to your comment about from Beatrice Klink, responding to your point, obviously, about Brazil being the most biodiverse country in the world, and actually the role the central bank can play to safeguard the natural assets. So maybe a little bit more from you, Otávio, and then I'll turn to you, Dr. Ma.
Okay, can you hear me?
Yes, indeed.
Yes. Okay, thank you. First of all, I'd like to reinforce that Brazil has a long tradition of regulated financial sector aimed at financial risk related to environmental issues. Our regulation was enacted in 2014, but we have many actions that we took after this time. One example, regarding more vulnerable biomes, the Amazon, the Cerrado, and the Pantanal have different treatments in the National Forest Code. In this sense, in 2008, we issued a financial regulation impose extended documentation requirements and more strict conditions for obtaining credit to finance economic activities in these areas, in the Amazon biome example. As I mentioned in my initial remarks, another important measure was the financial regulation the central bank enacted in September, last September 2021, which includes social environment and climate risk within the integrated risk management framework of financial institutions in Brazil. Within this financial regulation, biodiversity degradation is explicitly mentioned as an environmental risk side by side with air, water, and soil pollution, illegal exploration of natural resources, and other things. Thus, the broad concept of environmental risk, including Brazilian prudential regulation, may be taken as an example on how to consider biodiversity risks in the context of the financial sector. More recently, we have started to implement a sustainable rural credit bureau. Everybody knows that the Brazilian economy, one of the most important sector here is our agriculture sector. So we implement a sustainable rural credit bureau. Using geo-reference data, this bureau will check automatically for overlaps within the restricted areas, blocking such operations before they are contracted, and thus functioning as a second line of defense against non-compliance. Another layer of protection is added by monitoring the application of rural credit resources after operations are contracted, using georeference data and database processes. We expect these measures to help to reduce irregular land use change and consequently biodiversity loss, prevent banks from financial and economic activities that disagree with the environment legislation. I think in another opportunity, we can expose it to you how this Sustainable Rural Credit Bureau works. It is very, very interesting. We have many information about many things related to the biodiversity, and it helps us to maintain the compliance. It is as I said before, it is a second line of defense against non-compliance. And recently, we opened the data from this bureau to be used in more things related to financial system. So it is like open banking or open financial issue. So it is a very good example to explain here.
Yeah, that's wonderful, Otávio, and I'm sure actually I could spend another 2 hours listening more to you about the Sustainable Rural Credit Program, and particularly your focus on data, because I think that's really key in all of this, having the data and actually seeing how your process can actually act, as you say, as a sort of second line of defense and ensure that banks' activities are aligned with environmental regulation. Great. Dr. Ma, we've had a question actually particularly for you, particularly around China. And one of the things you didn't mention in your opening remarks is obviously this is a big year for global biodiversity policy. We're going to have hopefully a new global biodiversity framework, which will be finalized in Kunming in China. And also we've had a question looking from for Bebe Ying, I think, really thinking about that China's sort of financial regulations are being updated at the moment. So is there scope for better inclusion of biodiversity in China's sort of financial rules from the central banks and the supervisory bodies? So Dr. Ma, maybe more on what's happening in China, please.
Sure. Yeah, on Kunming, it's part of the COP15, which has the first phase and second phase. The first phase was done in October last year, and the second phase will be held in sometime middle of this year. And we're expecting the global biodiversity framework to be agreed during the COP in Kunming, China. And within the framework, I think some global consensus will be achieved in terms of protecting a certain percentage of the global land and the sea area. And therefore, a lot of efforts from different regulatory bodies will be joined to achieve that goal. In the finance side, I think there'll be a key message coming out of Kunming, which says that we need to drive global financial flows towards nature positive economy. And now, back to China itself, now let me talk about two aspects of how green finance should help biodiversity. One is mobilization, essentially how the financial system mobilizes more private sector money to support the nature positive economy. On that part, we have done quite a bit in terms of taxonomy, incentives, and the financial products. And the second aspect is risk assessment, risk management, which is relatively new in China. So back to the first aspect on taxonomy, this is something China developed fairly early. We started with the first taxonomy for banking in 2013, second taxonomy for bonds in 2015, and the third taxonomy for the entire economy in 2019. In the latest taxonomy, we do have included already 20 items of nature positive projects. And just give you a few examples of these. They include items such as sustainable agriculture, sustainable fishery, forestry development, reforestation, development of protected areas, and the wetland developments, and so on. Now, by including these into the taxonomy, has immediate benefit, which is the private sector wanted to do so because they can enjoy incentives. For example, incentive from a central government, low funding facility, a low-cost funding facility, or interest subsidies from the governments. And also they need to report these activities to regulators. Once the reports are looking good, they got additional incentive of having high scores, for the particular bank and so on. And the incentive side, we have few arrangements. One is interest subsidies. For example, for forestry loans, the government offers subsidy for interest payment ranging from anywhere between 1.3 to 3 percentage points. It's quite substantial for a loan of, let's say, starting with 3 or 4% interest rate. You are essentially paying only 1/3 of the interest from your pocket, and the rest, being paid by the government. And the central bank itself has developed a decarbonization facility last year, providing funding at a cost of only 1.75%, which is much lower than the market. Of course, that facility has not included biodiversity-related projects, but I think in the future, it's possible for us to expand the coverage of central bank facilities as well. And the product level, there's quite a bit of innovation in terms of developing blue bonds to help the blue economy, and collateralized loans and bonds using, for example, forestry carbon credit as collateral, and using entrance income of national parks as collateral, so that these activities, whether they are forestry development or national park development, will get financing on future income. Now, in terms of risk management, so far, some banks have been essentially using the safeguard measures, and especially those who have joined the Equator Principle. They are implementing the social risk management system. Under this system, these banks will review the qualification of the proposed lending projects against sector-specific requirements to ensure that the environmental social risks, including biodiversity-related risks, are being addressed. But the new topics which we are proposing in the joint study group report today, I think will generate a lot of new interest in China. As I mentioned to you last time, the China Green Finance Committee, which was set up by the central bank, has started its own study group on biodiversity. And we created quite a few research projects. And these projects are very much relevant to risk assessment management. For example, how to measure investment projects' impact on biodiversity, and how to conduct risk analysis, including analysis on physical and transition risks, and how to report these risks in reports to the regulator and to the general public. So all these are what I believe as work we just started, but looking forward to optional, actionable solutions going forward.
Fantastic, Dr. Miles. Right, we have more questions coming in, and we have a sort of, I think, a group which are really asking sort of what is the read across between this initiative, the statement that the NGFS has made, the actions we've heard about already in a number of countries, with other initiatives, not least the TNFD, the Task Force on Nature Disclosure, which obviously came out with its first draft framework quite recently, in fact last week, and also the Basel Committee, which, as we know, is also undertaking work on climate at the moment. So maybe if we could look at those, and then the third area looking at where this could land in a practical sense is this theme of transition plans. So this is, I think, becoming very familiar in the context of net zero on the climate area. Clearly, if we're moving to a nature positive economy, then that's going to be a transition, as we've heard today, transition benefits, but also for those companies which might be misaligned, there could be risks there. So TNFD, Basel, transition plans. Sylvie, could I start with you on the TNFD, because Banque de France is one of the members of the forum of TNFD, and your sort of thoughts about where that fits into the solution.
Well, for all this, we need data. We need to know what companies are doing. Financial institution needs transparency. So the work done by the TNFD under the chairmanship of David Craig and Elisabeth Brunner is of the utmost importance. It is also a very inclusive and interesting working method, where together you have market participants, NGOs, international organization, and, well, not so many public authorities. So it is very interesting to see how intensively they work. And so we have actually seen their beta framework 10 days ago. We are working on it. So TNFD can provide a strong push on the disclosure side and data, etc. The Basel Committee, the key question is the question of the intertwined relationship between climate and biodiversity. As far as I know, like many others at this stage, they are more climate focused, but as Frank reminded us, climate cannot be seen in isolation. And it was also said by Otávio, by Dr. Ma, the situation of Brazil, where the forest is at the same time a CO2 a shield for all of us worldwide, and a place where biodiversity can be destroyed, is also a good example. I was in Monte Carlo at the beginning of the week for the Monaco Blue Initiative on ocean, and your question on the transition, Nick, is probably the most difficult. I cannot answer it in a very simple way. We know more or less what transition for climate is. It is net zero in 2050, 2055, but what is ocean positive, what is from a nature related point of view positive in terms of transition, it has to be once again more modeled region by region. So we are working on that, and thanks for all the contributions and good questions. We will see maybe next year or in 2 years where we can be. If we have more data, if we have good framework put in place by the supervisors and the legislator, I insist legislation is key and it is not in our hand, then we can hope to elaborate step by step what is a transition to a nature neutral thing. And as Ma Jun said, the taxonomies adopted in China, adopted in Europe, are also very important tools to go into this direction.
Lovely, thank you, Sylvie. Frank, maybe on the Basel side, because I know you're heavily involved in that work. Any reflections?
Sure. So the Basel Committee is the international forum in which banking regulation is being devised, if you like. So it's important because everything that's being decided there then kind of like trickles through national legislation on banking supervision. Now, the Basel Committee indeed has started 2 years ago or so a task force on climate-related risk, and has stated very clearly that the entire three-pillar framework of the Basel Agreement, which is regulation, supervision, and disclosure, then on all these three pillars, work is going to be done and is being done now on climate. Now, in the second pillar, the supervisory pillar, a concrete product in draft that we have consulted is a set of supervisory expectations, just like the ECB has done, but now on the Basel Committee level. And in that consultation, there's a specific question on the beyond climate, environmental, biodiversity issues. So actually, I think actually the formal period to come with reactions might be closed, but we are still looking at many reactions we've had. So if any in the audience would like to still take up that opportunity and send in their comments, there is a specific question on this that will then feed in our work, and my hope is actually that we will be able to extend also on the Basel level. But this is, of course, in the end, something for the Basel Committee to decide. Maybe on the transition plan, really quickly, because I think this is also a very important issue. It's easy for a bank to say, for a CEO of a bank to say, in 2050, we will have a climate neutral asset or the balance sheet. This is 5-6 CEOs down the line. So I can make that promise every day. A transition plan, if it is well devised, means that you're saying, okay, I'll be climate neutral by 2050, but in 5 years time, in 10 years time, in 15 years time, I will stand here, and there. This is my route to get there. And by the way, I also publish KPIs, key performance indicators, and this is what I will do next year. and I will report on progress. And if I don't make the progress necessary to get to that goal, I will enhance my efforts. That's a transition plan. And that makes an awful lot of sense. It makes it real. Now, it also helps us as the supervisor to go to bank and say, okay, let's have a conversation. Let's start with your transition plan. What's the plan? And how, and does it bite? And does it have enough bite? And do you actually get to where you need to go? Now, this is now evolving very quickly. Many banks have actually, voluntarily promised to do so in this framework of the GFANZ, the global, the Financial Alliance on Net Zero. It's also now being put in the law by here in the EU by the European Commission. And my hope is, just like, and I will stop here, but just like with all these other things that we have touched upon today, scenarios, stress testing, data, supervisory expectations, all the work that we have done in the climate sphere, let's try to, as soon as we can, all that extended to biodiversity and nature related. So also, but not exclusively, but also in the sphere of transition plans.
Fantastic, thank you. And Frank, just a quick follow-up. Would you think eventually that the sort of question of adjusting capital requirements for nature-related risk would come into the frame as well?
I think that in the end, all material risks need to be mitigated, need to be managed, and need to be adequately capitalized.
Right.
So if we understand that these are material risks, here you have my answer.
Thank you. Good. Otávio, if I could turn back to you, because actually Brazil was one of the first countries really to think about how the original Basel III framework applied to environmental risks a few years back. You touched on particularly about a sort of how these questions of environmental risk, biodiversity, climate, social risk as well, how they apply particularly in the agricultural sector, which obviously is at the heart of Brazil's economy. Some of the questions are coming up. One is, do we have a sense of maybe some of the tipping points or some of the risks which could lead to real irreversible change in biodiversity and biomes? So that's a first question. And then the question is how you see the role of the central bank going forward in terms of building that sort of a food system which really does sustain nature and biodiversity. So Otávio, to you, please.
Okay, thank you. First of all, I would like to get one point that Frank said about, okay, you have a target to 2050, but we need to do something now. And I think the supervision has an important role in this process. So we must be made a development supervisory tool oriented to the top, along with the refining tools for both stress and sensitivity tests, as well as scenario analysis that factor in biodiversity loss, and bring it together now in step by step and follow the all financial institutions to aim the target in 2050. Regarding the second question, I think the most important is to look to central bank mandates. The central bank mandates is related to financial stability. So we do everything we need to do to guarantee the financial stability. And the Central Bank of Brazil has been doing a lot of things to do. And of course, in this agenda, the central bank agenda, we have a lot of positive externality to this topic, involving another players, another stakeholders outside of our perimeter. So when we launch the sustainability pillar in 2020 and enact the whole framework in 2021, many other stakeholders outside of the financial pyramid come to the central bank and help us to implement this in the financial sector. It is too important. So focusing in our mandate, financial stability, we will have to expand this topic to the whole economy, involving many stakeholders around this topic.
Fantastic, Otávio. I think that really echoes the point Sylvie was making earlier about the need for this inclusive approach. We're coming up against time, and obviously we haven't been able to answer all the questions. There's lots more to be done, but I'd like to maybe ask each of you just for some closing remarks. Sylvie, maybe starting with you in terms of sort of what next? Is biodiversity too complex? What do we do next in terms of practical steps? Sylvie, just closing remarks, if you may. Just a minute or so, please.
Very briefly, it is very complex, but we are not going to give up for this reason. The only conclusion we can draw from complexity is that, as I said before, we need to have the right team, to have skilled people, to work cross-border. And I appreciate that we were Asia, Europe, and America together today, even with the UK on board, so Europe at large, and we need to go interdisciplinary, maybe to work with people having competences we don't have, but we cannot tell our children, well, we were not aware because we know, and we cannot just say we were there waiting. And once again, I want to be positive. Yep. There are business opportunities, there are possible returns, it means motivation for the people involved. So we carry on, even if it is difficult. Thank you.
Brilliant. Thank you very much. Complexity is not an excuse for not starting getting the work done. Otávio, a closing thought from you, please.
Again, I will take one point that Sylvia said. There is a lot of opportunities. It is an important point that I highlight for financial sector. Look the opportunity in this process. This is a huge opportunity for business sector, and it is not only an obligation, it is a lot of opportunities. So looking ahead, I see that one big thing that we need to go ahead is the need to close data gaps. Right. Data gap is very important. For that, we have a build reliable, granular, consistent, and comparable source of data. In Brazil, the Sustainable Rural Credit Bureau already offered 2 reference data for applicable operation, which is relevant when biodiversity issues are being considered. For the adding and refining data is in this and other modalities of credit within our scope of action. So we need to improve the data to have a more comprehensive analysis of these risks and how to do with it.
Thank you. Thanks, Otávio. Frank, briefly, if I may, I think we might be coming up to the end now. Thank you, Frank.
Very briefly. We talked about very concrete, necessary, technical, difficult, complex steps.
Yeah.
Taxonomies, scenarios, data, you name it. All that needs to be done. But it needs to be done realizing that we are talking about something vitally important. And when I say vitally, I mean vitally important. This is about life on our planet. We are almost too late. It is super urgent. And we can do this, but we also must do this.
Fantastic. And last word to you, Dr. Ma Jun.
Thank you, Nick. I think given that it's so complex, it requires a lot of collective efforts of many different agencies within the countries. I think we need to work with the environmental regulator, with agencies that's regulating those activities that's polluting and destroying biodiversity. So it's not a standalone thing that the financial regulator can achieve. And internationally, I think we need to mobilize support of a lot of international organization platforms, each is specializing in certain aspects. For example, as you mentioned earlier, the disclosure piece, we may need to elevate that to ISSB for them to include biodiversity-related information in their future work. Right. And for NGF itself, I think it's already being considered that the biodiversity-related risk and its analysis will be a part of the program for NGFS. And for IPSF, which is developing sort of reference for taxonomy, I think some sort of analytical framework for including biodiversity into the taxonomies will be useful coming out of IPSF.
Fantastic. Well, Ma Jun, Sylvie Goulard, Frank Elderson, Otávio Damaso, thank you so much for joining us today. Thanks to the over 100 people who contributed to the report. Thanks to the many hundred who contributed to this event. I think this is perhaps, we could look back on the day when nature-related financial risks, biodiversity-related financial risks really arrived as a practical issue, as we've heard from all our speakers today, for central banks and supervisors to join. I'd like to add my thanks to all the people on the study group, the core team at the NGFS Secretariat, at the LSE, who've made this all possible. And let's continue the dialogue. A recording of this this presentation, this event, will be made available as soon as possible. So with that, I'd like to thank you all for joining, and please have a good day. Thank you.